All right, let's jump into it. So let's fix this up here. Where we at? 11:54, 6th of November on a Thursday. So finally, actually got a little bit of data out this week as well. So I didn't cover it just the other night. Sorry, not the other night. I meant last night. We had ADP coming out. So we had a small little revision from -32 to -29. So I guess actually slightly up there because obviously moving from -32 to 29. Uh, 32 was expected, came in at 42. Positive, dollar positive. For what it's worth. I mean, look, ADP is never really a big, massive mover. Even when everything's running normal anyway, it's not like, oh my God, ADP numbers are huge. Remember, ADP makes up a portion of NFP. So that's why people sort of think that it could be a bit of a precursor for what we're going to see in NFP. But the correlation between the two is somewhat a little bit iffy in that from time to time anyway. But still, look, it's a little bit of data that we have at the moment. The shutdowns just ticked over the longest on record. Um, and I don't know. I've heard some murmurings of potentially he's coming back, but who knows? We will see. We will see. Anyway, we had that. Plus, we also had ISM numbers and that. As you can see, it's a bit of a mix with the two here, but generally both of this, these are the ones where 50 is a benchmark. So yes, move down. We expect to hold here. ISM 52.4 against 50.7. So a beat on that side of things there. And this is what's interesting with these kind of bits because, you get a strong bit of data. ADP, technically strong bit of data. Both favour the idea that would probably see a little bit more sort of like dollar strength with this kind of sort of stuff. But the market kind of sold into it. And, that's pretty. Sorry, just before getting distracted and watching things at the same time. um, that's always a little bit telling because you can have the same data now and the same data, like exactly the same numbers come out in 6 months' time, and you can get market reactions that are very different. So it's not so clear cut that okay, well this comes out double positive, bang, and we move it up. It depends where the Fed's at, what their outlook is, what the market's positioned for, and then you apply that to sort of the data that sort of comes out. So on a quick little look through the rest of the data here, we had goods balance in Australia 1.1 previously. That's a revision down from 1.83, so negative there, but absolutely thumped it. Came in 3x on top of that, or more than 3x on top of that. So very, very big numbers there for the Aussie. Hasn't really helped it much. I mean, Aussie's been pretty much slammed, despite all the stuff with the bullock and the holding of the rates and all this kind of stuff. But as I've said time and time again, Aussie data means very little when the market consensus is so strong in either direction of the US dollar. So if the market's buying US dollar, and this is represented by DXY sort of going up, then Aussie can have rates being held, they can have hawkish talk, but obviously we've seen last couple of days that doesn't matter. That takes the back seat to all that. Moving on just quickly through this, we've got GBP, so BOE rate decision later tonight, 11 o'clock, and they're expected to hold there, and that's about it in terms of data. So let's jump onto the charts quickly. So DXY, this has just opened up. Of course, we're in those summer trading months, which obviously suck a little bit, but we get to 12 o'clock and we're only really just sort of starting the day, and we've got a little bit of a gap down to kick things off with DXY here. Now, big thing about this is quite a significant level that we're coming up into here. If we jump onto the daily, you can see it. These are the highs that we had before. Look at this nice big run up before it got absolutely slammed back down to make its lows. So this is going to be quite a significant level. Above that, we've got 150. They're both going to be significant levels. But the point is, as you can see, with this plan that I've been sort of drawing out the last week and a bit, the general consensus, the idea is that yes, we'll move up into here. We've hit this zone now, and we're expecting, or at least I'm expecting, a little bit of a cooling off. Now, I don't think that this is necessarily going to be the time that we go, and okay, we come back down to these lows. I don't think that's the case. Remember, we do have that gap that was left open, so that'll come into play at some stage, but I don't think that's happening right now. What I am sort of thinking potentially though is, as you can see this green line, a little bit of a pullback. Excuse me. So levels that I'm looking at are 99.7. I'm looking at 99.4 for a possible overshoot. So something down like this before then potentially a move back up and to sort of take out that level of the highs there. Now, the reason that I sort of feel that we're probably going to be sort of seeing a little bit of a cooling here, despite these bits of news, is because, as I said, you've got dollar positive data and the market didn't go, hey, that's great, cool, let's run with it. They said, oh, that's great, boom. People are going to be seeing that, thinking dollar positive data, let's buy it. And they're just using that to sell into. That's just providing them the exit position. And this is interesting, this kind of stuff. And it was the same with gold when Iran was getting bombed, that people go, war is good for gold. Yay, let's buy gold. And what happened? Like they literally dropped the bomb on Iran on their soil, and gold dropped. Well, we saw the resulting action, and I'm talking sort of, you've got to keep in mind the time frame of it all because obviously we've seen much higher levels in gold since then. But I'm just talking around the actual scenario and the actual sort of point of these things sort of happening. So the fact that sort of we've got a couple of things happening here from a technical standpoint, we're coming into a resistance. We've got negative divergence, so that buying pressure that's sort of really getting the price back up into these levels obviously is coming in just a little bit lower there. And we've seen a bit of a gap down on the open here. Now, I've got a little alert that looks like it's almost about to sort of go off here underneath 100.5 or 100.4 or so, underneath those wicks. I think if we take out these lows, that could be a pretty good little confirmation that we're probably going to be starting to see that little bit of a move back down to these sides over here. As I said, I don't think it's like, okay, game's over. But I do sort of think that, it could do with some cooling off. We've got a technical setup for it there. We're sort of seeing how the market is reacting to these things as well. And, it could be just a little bit that, okay, we're a bit overstretched here. Have a look on the daily. It's overbought, sorry. Take out yesterday's lows, possibly see a little bit of a cooling down over here. Obviously, it's left a little gap here. So I'll mark this in. So this area through here. So this is a gap, which can be a bit of a magnet for us in the future. Should this thing not close now, so if we sort of see this and continues to dribble down here, well, 99 out of 100 times gaps will close. Obviously, as I said previously, we still have the gap wherever it was down over here, didn't actually close. I saw there was a gap, I think last year, maybe the year before, I can't remember, which actually took about 8 or 9 months to close, right from the highs. I won't bother going back and referencing it on the chart now, but take my word for it. But point is, it did close. It did eventually get there and did close. So look, a couple of these things, generally we might see it close straight away and then, it's got no reason to come back up here. But if we see this thing sell down as it is now, and then, maybe we have a day or two, a session or two coming down here, let this RSI cool off a little bit, that could give us another reason to be getting back up here to tackle these highs, to have that second effort into that zone and potentially see a bit more of a sort of breakout, a bit more sort of dollar strength overall. We'll have to see how this obviously plays out. I mean, we've only 2-3 minutes into this at the moment. We had a bit of a gap down at 11:45 when that market opens. But we'll see how we go here. But at the moment, it does look like it wants to cool off. You've got the negative divergence into the resistance. It is the resistance. We've got a, oh, Jesus. Oh, those alerts going off with the headphones on. Wow. Anyway, point is, can you see that on the screen there? I think maybe. Negative divergence confirming down underneath this zone. So that was that little alarm that's just gone off there. I'm going to have to turn that down. Blow my eardrums. All right, so yeah, look, as I said, yeah, that's pretty much what I'm thinking. Probably a little bit of a dollar weakness there. Now, if we do see the flows sort of come out of the dollar here, even if it's just a bit of a temporary sort of play, where would it maybe going? And obviously, metals is probably a bit of an option. it did obviously have a bit of a slap down 2 days ago. It's made its way back up here very quickly. Now, interesting sort of thing, particularly just with gold here, is that this is actually technically 3 higher lows that we've seen now. It's not anything sort of spectacular. Like you can see that obviously as this was trying to form as a little triangle, when that broke, back tested, bang, slammed down. But as it is coming back down here, it's quite a scrubby chart. I've got to clean up some of these lines perhaps. We are sort of seeing it trying to sort of actually put in higher lows. We've got the sellers coming down here, so we've got lower highs as well. So we probably will get to some sort of point pretty soon where we're going to get an actual sort of direction. I'm still in the camp, excuse me, of potentially seeing a move higher up to around this 41.40, 41.50 zone, which is around this sort of, it's around the 61, it's a little bit shy, it's actually probably it's closer to the 50% mark and that. If you actually look at this on a daily, this little measured move down here, if you take that, so if this double bottom, if this flips up here and comes out the top of sort of 40.30, 40.30 is going to be the sort of confirmation in this regard. You're looking at 41.30 for a measured move, and the reason I sort of say this is because I mean it's not confirmed yet, but it's the same sort of structure that I always sort of talk about in the sense that you can see it here. It's moving down, found support, moved up, found resistance. Came down, tackled those lows, broke through, and the cycle starts again. Find support, though in this instance I'm using this body fill, but the idea is still the same. But the body fill is support, bounces up, finds resistance, moving down here. Now, the reason I'm using the body fill is because I think this wick was just a little bit of an overshoot of it all. But in both regards, that would actually mean you've got a higher low, which gives you a higher chance of reversal. But as I said, I'm sort of going more with the double bottom idea, just using these body candles, where we sort of saw it close down on yesterday around that 39, 39.27, these kind of levels here. If that is the case, then obviously it's failed to go through at this point. So it puts the emphasis back on this level over here. So it puts the emphasis back on 40.30. Obviously, we're seeing it sort of sold down a little bit into as we open the session up. But a move down to 40.30, a move up to sort of 40.30 is then going to be giving us the two possible outcomes from there, which is we see a range start to form, or it breaks, or it breaks through. And then if it breaks through, the second outcome there is this, and we go to completion of that double bottom. But for me at the moment, it's the emphasis is on that sort of 40.30. That's the level I want to see buyers actually sort of take it up to. I don't want to sort of see what the market decides to do with that there. I think that'll be a better sort of tell for the time being. I mean, look, this could just sort of dribble back down over here. So gold actually take a little bit of a clipping here. We could see this thing just come back down over here, down to these 40-30 levels. So we can have a look on a lower time frame. See, oops, geez, look at all these arrows. Let's get this out of the way a bit. I think 55 is probably where you want to see this thing hold if it's going to hold. I think sort of 55, underneath 55, you're pretty much going back down to probably do the body fill down at 39.30. But we will see. I'm not really so much in that camp. I do think, as I said, that the dollar's going to give up to the downside. And with that, I think we are going to see the flows come back into the metals. So there is potential for maybe some little stuffing around here at the moment, but I think I am playing the idea that we will eventually break a little bit higher. I don't think there's going to be a main recovery, like all the way back to the highs. I don't think that's the case. But I do think that there's room for this thing to sort of at least squeeze up a little bit and then potentially see a bigger drift and move to the downside. But of course, we're going to have to wait and see how that one sort of plays out. All right, just had to manage a few positions there. Have a quick look around. We've got silver. Now, silver, a little bit of a tougher one. Um, I did say the other day that there was this idea floating around of this inverted head and shoulders. I don't like how deep this came, to be honest. For me to be, okay, this is an inverted head and shoulders, I don't think that's something I want to sort of overly commit to. Um, I do think, again, that we could see some potential upside. It's not looking like it at the right this second, but certainly, sort of, I think that again, look, if we do see the dollar continue to sort of cool off a little bit, I think sort of the metals here can be a little bit of a beneficiary of this sort of stuff. Again, okay, reiterating the same stuff, that it's mainly just an idea that we could sort of get up a bit higher to then actually come down lower. But yeah, we'll see how this goes. Certainly, it's a little bit of a sort of a little bit of a rough open for the metals here this morning. It was very wild, actually. Have a look at this on the lower time frame. Can't see so much here, but yeah, this was the little candle open, and it flicked down. That was like, I mean, not quite as ugly as this looking one here. This is 78, 40 cents, almost half a buck down for silver in what 11 minutes. So we'll see how we go. See how we go with it all. But yeah, as I said, I'm still in the camp that we're probably moving a little bit higher. Just have to sort of see how this sort of plays out. Take out overnight highs at 48.30, and that could give us some sort of break a little bit higher there. Move along. We have Aussie dollar. Aussie dollar. So this thing yesterday played out very well. Like if you have a look at this on the 4 hour, the confluence of this. So at the stage we didn't have this, excuse me, initially didn't have this bottom line down here, but it was just one that was, I mean, sorry, so let me start that again. We had this top line here with two touches. The general idea and thought is, okay, well, if this were to be a channel, where would it go? Match it with this low, and then came back in and confirmed almost pretty much to the point. Now, I say this constantly, 60s are a reoccurring number with Aussie. And as you can see, on 60, pretty much past a point or so, it sort of played the part and sort of bounced and pretty much dribbled up through the rest of the session there. So it is attempting to sort of come out, excuse me, of this channel, rejecting a little bit at the moment, of course, but we'll see again. I think a lot of it is really predicated on what's going to be happening with the dollar. If the dollar does sell down, I think this could give us some upside with Aussie, but I think it's more upside to be sold down into. So if we chuck a little fib onto this one here, let's make this a different color just so it stands out a bit more. White. Cool. So you can start to say where may it sort of come up to. I would say, look, if we can get a flip of this and sort of take out 65.15, which is that daily level we have here, I think that could open us up in that. And look, you could be moving anywhere up to 65.55. That's around the 61% retracement. That's about as high as I would probably be looking for Aussie to move at this stage, just given everything going on and sort of the reactions over the last week. Because you got to think we've had everything lining up for it to potentially at least hold a bid and unable to do it. So there's something going on there, and it's not just okay because the rates are like this or the rates are like that. No, it's just there's some underlying thing, and pretty much that, as I keep saying, is the general market consensus towards the US dollar. If they start to buy that up, Aussie takes a back seat. You just got to remember that. So another thing that I did notice, if you chuck this on the daily, we've almost got this little triangle starting to form with a couple of connections down the bottom here, missed by a point or so, just down to this one over here, and then obviously a little bit of a highs over here. So I imagine we could still continue to see some choppiness till this thing breaks. There's no real sort of like, you can't, like I say, sort of, this is really consolidation. And yes, you could say you're vaguely moved into it positive, but Aussie has just been an absolute chop fest the whole year. So look, I'm open to the idea that we could potentially see a short-term move a little bit higher, but should we get up around that 65.50, depending the speed as well that we come into it, I'd probably be looking for shorts again around that 65.50 area and that. So I got out of mine a little bit early yesterday, but I think the last of them were in the 70s. I had my TP at 60 or 61, and I sort of obviously jumped the gun a little bit early on that. That's fine, but yeah, we'll see how this thing goes. So it feels like it feels like I'm saying that a lot at the moment. See how this goes. One thing you can see with this on the daily here as well. This is obviously a crucial level for it. I've got it marked out with the daily at 64.83. This managed to hold for this is about a 2 week consolidation before we gapped out of it and shot up. Obviously, we sort of come right back down, closed that gap plus some, overshot a little bit. But this will be quite a significant level to see if we get a daily close below 64.80. If we get a daily close below what we've held for 2 weeks, 2 weeks plus, I think that's going to be the time that we open up and we start to look to 64.20s. 64.20 for me is a very major level before 63.70 as confirmation of the move to the downside there. But I think sort of there's room for dollar to cool a little bit, for Aussie to appreciate a little bit, but I think that's going to be short-lived before we see something more like this. All right, flip along quickly. Copper broke that little channel that we had, the little wedge that we had set up from the weekend. We have sort of seen that obviously I said, give it a second till it gets underneath this little swing low because we know that copper isn't afraid of doing fake outs. Broke down underneath that and then obviously bang back down to this other level that we have marked in here. It seems to be holding for the time being. This will be confirmation. $470 is where I'm looking for. Should we break 493? Copper I put on the back burner for a while. I've covered this a number of times just due to these kind of moves here. These things are just, you got to be very careful. This will blow your account if you're not careful. Even if you've got your stops on, it could still blow your account because, there was just no time for people to exit. These were within like a minute or 2 minutes and it drops 21%. It's just crazy. But anyway, short here and now, I wouldn't be surprised if we see a little bit of a move towards 470. And finally, the yuan has really sort of kicked back into life. This big yellow line running through the middle here is that weekly rising support. Don't know if I would say that's the reason that this thing sold off, but it has kind of come back and tested the underside of it and rejected down here a little bit as well. So 715 is the target for the top side, but there is potential for this thing to come back down here before another move up over to these sides over here. And this goes in line with what I was saying, that potentially sort of you see the dollar DXY sort of weaken off a little bit. You probably see it against the yuan as well. Generally, as this is sort of typically there is an inverse relationship with gold and yuan. Like moving down will be gold strength. So a move back down here, you may see dollar weaken, you may see the yuan push down, you may see gold push up a little bit, Aussie push up a little bit, if this were to sort of come down like this. But should it find its feet and then rally up and move this direction, that's when you would see things start to roll off. And if this is to play out, and if the correlation works with this, we'd see some upside on metals, we'd see some upside on Aussie, but it may be short-lived. I mean, look, if this, whoops, not that one. If this were to really melt down and come down the bottom side of here, well, you'd probably see Aussie and gold appreciate a fair bit there as well. But we'll see how we go with that. As I said, that's the seems to be the theme of today. Last little thing here with gold silver ratio. Played very well. So this is the price target I was touting for a bit. This is the negative divergence as it came into the resistance. And I think this is important to look at because one, yeah, I mean, that was a great call. Thanks. Negative divergence, picking out where the market was going to do it. But the second thing is this is a resistance. This is a negative divergence into resistance. And you can see what happens when it confirms and sells off to the bottom side there. It doesn't mean game over, but it does show that that particular setup, negative divergence into a resistance, can have decent implications and movements afterwards. Now, we are sort of attempting to have some sort of maybe form of a channel. I've got this alert underneath the lows for the idea that we come back down here, take out these more recent lows, maybe around this 80 level. I do have a zone from here going way back to June 24, where I think that should price come back down into it, could find its feet a little bit here. Generally, as this chart moves down, we see strength in metals. Silver will tend to outperform gold in those sort of instances. We are seeing, obviously, at this very second, it pushing up here a little bit, and we're seeing silver take a bath against gold a little bit there as well. Like silver's down about 30 cents or something in the last couple of minutes, and gold's down $2 or something like that, so pretty flat. But if we break out of here and go above 84, gold might be the place to be if you're in the metals. But I'm probably playing more of the idea that this will kind of reject here and then dribble and sort of come back down here, take out those previous lows, maybe give us some sort of negative divergence that we can work off once we get down here. And that could be a bottom for us to then sort of come back up and target that 85, 86 area. All right, that's it from me.